Hello traders, Gary Wagner here. After 1 o'clock in Honolulu, 7 o'clock in New York, it is Friday. Happy Aloha Friday, as we say on the islands, 14th day of May, 2021, and this is the daily report for gold and silver, our weekend review, and an interesting week at that. We had extreme volatility with a tremendous move to the downside on Wednesday, a tremendous move to the upside today on Friday, and the net result was very little change from the open on Monday to the close today, about $7. We did pull profits, definitely a little early in gold. We're still long copper. We'll talk about both during the show, which begins now. Traders, to say that this was an interesting week for gold would absolutely be an understatement. It finished extremely strong, up $20 at $1,844. However, when we look at the big picture in terms of how it traded through the week, and specifically when we look at a weekly chart, which I have on the right, what you can see is a doji candle. And it made what I'm going to call an equal high. It was slightly higher, but only by about a tick. It certainly made a higher low than the prior week. However, when we look at what happened this week, we've had these series of tops that have come in almost on a daily basis, and this is truly a resistance area. While we did get a higher high than we have seen throughout the week, at the same time, what we must acknowledge is that in terms of the range itself, gold is still range bound, trading between these two lines, this representing the high, this representing the low. I also believe that absolute major resistance occurs at approximately 1850 to 1855. That is the 200-day moving average. In terms of major support, that still has to be set at about 1800, and that also represents the 21-day exponential moving average. Traders, as you know, earlier this week, we pulled profits. We pulled profits well below current pricing, especially with today's $20 rise. However, I am absolutely reluctant to put on a trade from the long side, as we are now back to the upper ends of this range and close to the 200-day moving average. This was originally where we put in a price order before the market failed and sold off, and that, of course, occurred on Wednesday. Depending on activity at the beginning of next week, we're either going to see it break above resistance, and then that will become support. We would buy that breakout, or we will see it move back down into this range, and then we will look to buy it at the bottom of the range. That is my best assessment for our next move in gold. Copper futures did give up some ground this week, selling off mildly over the last 3 days, currently fixed at $4.66 and change. We are in at $4.55. We still have a dime on the trade. We talked about key levels that the market needs to hold above, and that key level is $4.62. We will look to raise our stop next week, but this is a July contract, and that being said, we are looking at this as an extremely long-term trade. This was truly a historic week for copper as it hit the all-time record high at the beginning of the week, and that is this day here. On Friday of last week, it opened where the low occurs in today's trading activity, and therefore I believe it is a pretty critical level at around $4.62. To me, it would be important on a short-term basis that we hold this level and that we see an uptick at the beginning of next week. If not, we would look to raise our stops quickly and pull what profit we had. Look for some sort of a correction and a correct point to re-enter, because in terms of our long-term forecast, I believe copper will trade as high as $5.45 over the next couple of months. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.